In this video, I'll explain how Warren Buffett appears to be taking advantage of a slight stock market loophole to potentially make himself about 25% in a relatively short amount of time. Very subtly, Buffett has made a sizable bet on a new stock. This is not your typical Buffett-style investment, like what he did last year with Activision Blizzard stock. Instead, Buffett has made another big arbitrage bet that a certain corporate merger will go through, but this one seems to be much more likely for roughly the same potential upside. The stock in question is Liberty Media, the owners of Formula One Sirius XM Live Nation. And it all begins with this announcement from Liberty Media and Sirius XM Holdings from late last year. I'll read through the announcement first, and then we'll go over everything. So don't be discouraged if you're a little confused about what's going on and how Buffett is going to make his money. We'll go over that in a moment. However, the statement stated that Liberty Media and Sirius XM Holdings Incorporated, the top audio entertainment firm in North America, made the news today, believe they have signed formal contracts, whereby Sirius XM and the Liberty Media Sirius XM Tracking Stock Group, collectively known as LSXM, will merge to form a new public company called New Sirius XM. This new company will continue to operate under the Sirius XM name and will have a single outstanding series of common stock, which is expected to continue to be traded on the NASDAQ Global Select Market under the ticker symbol SIRI. In other words, this merger represents a window of opportunity for Warren Buffett to profit from the combination of Sirius XM and the Liberty Media Sirius XM tracking stocks. To understand this merger, we must first understand the players, and this is where it can get a little confusing. So pay close attention for the next few minutes. So what is Buffett doing, and how is he planning to profit from this relatively simple merger? Liberty Media is the stock that Buffett is purchasing, correct? Liberty Media, a large U.S. mass media firm, operates several various business divisions. It owns 83% of Sirius XM, an American broadcasting corporation that offers a variety of online and satellite radio channels, along with the music streaming service Pandora. Beyond that, Liberty recently acquired MotoGP and Formula One in 2017. As a result, they also have a motorsports division called the Formula One Group, which also owns a stake in Meyer-Shank Racing, Quint Events, and F1 Arcade. Lastly, they have a live entertainment division that includes a 30% ownership in Live Nation, a music concert company that also owns Ticketmaster, as well as smaller stakes in a few other companies like Drone Racing League, Tastemade Overtime Sports, and Crony Arena Company, which owns a ball arena in Denver. Now that's difficult enough to understand already, but not for Liberty Media. You would think that all these businesses would just fall under Liberty Media stock, one ticker that represents all these various businesses, kind of like how purchasing Berkshire Hathaway shares represents lots of different businesses. However, there are many businesses and investments under John Malone's Liberty Media, and they sort all these wholly owned businesses and investments into those three segments. You would be mistaken, though, as there are actually 9 different shares that you could purchase in order to own a portion of Liberty Media. This is due to their tracking stock system, which offers 3 classes of shares for each of the 3 business segments rather than just one basic Liberty Media stock. We'll now focus on just the Sirius XM Group and its 3 classes of shares. A shares have 1 vote each. B shares have 10 votes and are owned by John Malone, and C shares do not get a vote. This means that if you want Formula One but not Sirius XM, you can have that. Similarly, if you want Sirius XM but not motorsport or live entertainment businesses, you can have those as well. Long story short, Liberty Live Group has Class A and C shares. Their Formula One Group has A and C shares. And finally, their Sirius XM Group also has A, B, and C shares. The fact is that the Sirius XM Group as a whole owns 83% of the shares of Sirius XM Holdings, a publicly traded business that is traded on the NASDAQ and is denoted by the ticker SIRI. This brings us back to that announcement made earlier in the year. Liberty Media, which owns 83% of the shares in Sirius XM, and Sirius XM Holdings, the public company, got together and said, "This is way too complicated. Let's merge Liberties." Sirius XM ARM and Sirius XM Holdings to create one brand new definitive Sirius XM stock. As I mentioned earlier, they will merge Sirius and these three classes of Liberty shares to create this new company. This leads to an interesting situation. The market capitalization of Sirius XM Holdings, the publicly traded company, is currently estimated to be worth $13.41 billion. However, by examining the three different classes of Liberty Sirius XM shares, multiplying the number of outstanding shares by the price of each class, and adding those totals, we can see that Liberty is valuing their 83% stake at $8.91 billion, or, to put it another way, valuing Sirius XM Holdings at a total market capitalization of $10.74 billion. This means that while the market capitalization of Sirius XM Holdings is currently estimated to be $13.41 billion, Liberty shareholders value it at $10.7 billion. There is a difference between the market capitalization of Sirius XM and the value that Liberty shareholders place on the company. The latter is much higher than the former. Hence, what Warren Buffett has done is go ahead and buy a lot of Liberty Sirius XM A and C shares in the hopes that he will end up with new Sirius XM shares that are traded on the public markets for a little bit more than what he bought his Liberty Sirius XM shares for. This is a pretty wise move on his part. Heish recently explained this to me on our show. In essence, the gap in value will close if the merger is permitted, since two shares that are currently listed at kind of two distinct prices will merge into one price. Thus, the gap is going to close, and those who wish to trade this kind of thing will frequently do so. In this particular instance, you might purchase Liberty shares and then short sell Sirius XM shares in order to profit from the gap that is going to close. Warren Buffett has already done this. We're not sure if he's doing it both ways, aka purchasing Liberty shares and shorting Sirius XM, but we do know that he is piling up on Liberty shares thanks to the strength of the Form 4 filing. Form 4 is a form that details changes in beneficial ownership of a company. Essentially, it's a disclosure that has to be made if an investor who owns more than 10% of a company decides to buy or sell shares in the business. For example, Warren Buffett owns more than 10% of Liberty Sirius XM shares. Form 4 is somewhat similar to a 13F, which is a form that super investors in the United States are required to disclose at the end of each quarter. Consequently, he must notify the SEC of any additional purchases or sales made during the next 2 days. This is evident from the history of Warren Buffett's Form 4 filings. This article from MarketWatch, which notes informed filings with the U.S. Securities and Exchange Commission over the past week, that is, the last week, March, Buffett's investment vehicle Berkshire Hathaway disclosed that it paid about $257.95 million to buy 8.9 million Liberty Sirius XM Series C shares at a weighted average price of $29.06. Summarizes the situation fairly well. Since January, they have been telling you straight out that he has been buying a lot of Liberty stock, particularly in March. Additionally, Berkshire revealed that it paid $110.32 million to purchase 3.8 million Liberty Series XM Series A shares, with an average price of $29 per share. All, Berkshire acquired 12.68% of the stock. However, the intriguing outcome of all that purchasing is as follows. In other words, Buffett now owns approximately 30% of Liberty Sirius XM's outstanding shares, or 83% of all Sirius XM shares. When you combine the new buyers with the 43.2 million C shares and the 20.2 million A shares that Berkshire already owned going into Q1, Buffett suddenly has a $2.7 billion position in Sirius XM through Liberty Media, making it the 10th largest holding in his portfolio, sandwiched between D and Citigroup. At first glance, this may seem like a little fun side bet, but when you add it all up, it's fairly substantial. This is the sneaky way that Buffett is gaming the system by purchasing Sirius XM shares at a discount through Liberty Media's Sirius XM tracking stock, and then hoping that when they merge, the new shares will trade closer to the share price of Sirius XM Holdings as opposed to the tracking stock. The only question is, however, will this moja actually go through for Buffett? If the new stock that's set to be created does take on a market cap closer to Sirius XM holdings as opposed to the $10.7 billion that the Liberty shares value it at, Buffett stands to make up to around 25% on his money in a short amount of time. This is not an acquisition, so this should be much simpler, touch wood. As you may recall, Buffett also placed a risky arbitrage wager on Activision Blizzard last year, believing it would be a cinch. However, that bet nearly collapsed when the FTC intervened to try and block the acquisition. It was a stressful time for Activision arbitrageurs. It's just a merger, and to elaborate, it's a merger of two companies that are essentially in the same business. One owner of Sirius XM shares is joining forces with another. This should be mentioned once more because the two mergers are rather simple. Warren Buffett's recent actions are a result of the uncertainty around what the market will value the newly formed Sirius XM company at, and consequently, how much of the potential 25% upside he will actually realize. As usual, I would like to bring up another point about Berkshire Hathaway. It should be noted that there are 3 asset managers that this may have possibly been under. Personally, I believe this was Buffett given the size of the position and his willingness to take part in riskier arbitrage chances. There are other investors like Todd Combs and Ted Weschler. However, there is currently a theory that suggests Ted Weschler might have also been involved, which doesn't actually change the information or the purpose of this video. It's just something I felt like bringing up. It doesn't make the investment any less worthwhile or interesting. In fact, it appears that Seth Clarkin, another well-known value investor, is also riding the arbitrage wave because he owns a significant amount of A and C class Liberty shares. Warren Buffett's decision to make a substantial bet on Liberty Media speaks volumes about his investment philosophy and keen eye for opportunity. As one of the most successful investors of all time, Buffett's move underscores his confidence in the long-term potential of the company, despite its hidden status in the market. This investment is not merely a financial transaction, but a strategic endorsement of Liberty Media's underlying value and growth prospects. By allocating a significant portion of his portfolio to this hidden gem, Buffett has sent a clear signal to other investors about the untapped potential he sees in the company. His bet on Liberty Media is a testament to his contrarian approach, where he is willing to deviate from popular trends and conventional wisdom to uncover undervalued assets with the potential for substantial returns. As Buffett's investment attracts attention and scrutiny from the financial community, it may shed light on the overlooked opportunities within the media industry and prompt other investors to reconsider their investment strategies. In the end, Warren Buffett's bet on Liberty Media serves as a reminder that successful investing requires patience, conviction, and the willingness to go against the crowd. As the story of this investment unfolds in the coming years, it will undoubtedly be studied and analyzed by aspiring investors seeking to emulate Buffett's legendary success in the stock market. As we conclude this tutorial on investing, I hope you found valuable insights that will empower you on your financial journey. Remember, investing is a journey, not a destination, and continuous learning is key to success. If you found this video helpful, don't forget to give it a thumbs up, share it with your friends and family, and subscribe to our channel for more insightful tutorials on investing. By staying engaged and informed, you're taking proactive steps towards achieving your financial goals. Thank you for watching, and happy investing!